If you're eligible for a VA home loan, it is one of the cleanest paths to home ownership. It offers no money down, no private mortgage insurance. However, the deal only stays smooth when you pay attention to VA rules and guidelines early before you start writing offers. I once had a buyer that was active duty, military, and working on a tight timeline. He was convinced that the VA process would slow everything down. So we had the pieces mapped out. It looked like a normal mortgage timeline. We were able to structure an offer so that we didn't exceed any seller concession limits that the VA has, and we're able to close smoothly and easily and on time. So let's discuss 5 key points on working with the VA loan. And this really helps buyers, of course, who are using the VA loan, but also can help sellers who feel like a VA loan is going to take a long time, because really they take no longer than any other loan. They're great products. And when somebody's pre-approved with a VA loan, you can pretty much guarantee that it's going to close. Key point number 1, a VA loan is not money that the VA lends directly. You work with a lender, and the loan follows VA guidelines that make homeownership more accessible for eligible veterans and service members, including guardrails on things like seller concessions and how the loan can be structured. One detail to set expectations early is that since you're working with any lender, most lenders have some type of origination or loan fee on the front end. So just plan for that. That's not really avoidable, but that depends from lender to lender. And one very clever piece of marketing, that because we work with a lot of VA people in the past, that there's a company out there called Veterans United. And a lot of times veterans feel like they're working directly with the VA. You're just a loan company like any other loan company. Like I said, any lender can do a VA loan. They just happen to have a very clever bit of marketing involved with them. So good company, but any lender like our company Envoy, we do a lot of VA loans as well as all lenders out there too, like Quicken and Rocket Mortgage and all of them. So just as a quick note on Veterans United. Key point number 2, why 0% down matters. There, the headline benefit is simple. You're able to buy a home with no down payment. Pretty straightforward. It makes home ownership a lot more accessible to a lot of people who have the paycheck to pay for a home, but they don't have all the cash to come to the table with. And so when you structure a loan, a VA loan, it's no money down. There's also no mortgage insurance premium. A lot of like no down payment or low down payment loans out there have what they call a private mortgage insurance premium, and that can add $200, $300, $400 a month, depends on the size of your loan, on top of the principal and interest and any insurance that you have. So if you're able to save an extra $200 to $400 a month or more, that's in money in your pocket. That's not you're having to pay for your home. So huge benefit there. And keep in mind, as long as the home appraises for the contract price. So if your home price is $250,000, the home has to appraise for at least $250,000. Key point number 3, the certificate of eligibility, the COE, comes first, right? Your eligibility to get a VA loan is determined by your certificate of eligibility. VA Form 26-1880 is something that you as a veteran or service member or somebody who's eligible for a VA loan needs to fill out on the front end before you talk with a lender, before you try to get it pre-approved, before you go shopping for houses. That form comes first and eliminates one of the biggest friction points in the loan process for a VA loan. And again, to reiterate, that certificate of eligibility shows that you are eligible based on your history and your status in your military service and being able to get the VA benefit. Key point number 4 is the VA funding fee. This is a one-time fee that you pay when you use a VA loan, and it's a percentage of the loan, also based on your down payment or how much down payment you're making, if you're making a down payment at all. Now, there's 2 ways to get the VA funding fee paid. The easiest way and the most common way is that it just gets financed into the loan. Very easily done, no problem. If you want, you can write a check for it at closing and have that part of your closing costs. This is one of the first numbers that the lender will clarify for you because it affects your down payment and your cash to close amount. Again, if you're bringing money to closing at all, which leads us into point number 5, and that is the 4% rule. Now, the VA has structured it in such a way that you can ask for unlimited closing costs. if, in other words, the seller to pay your closing costs, where you can literally get into the house with no money down, no down payment. Seller pays your attorney fees, seller pays some of your loan fees, and then it's no money down. Now, there is a limit on what are called seller concessions, and that's up to 4% of the reasonable value. And when we say reasonable value of the home, think appraisal value. That would be considered reasonable value. So 4%, so again, use the $250,000 example. The seller is able to contribute up to $10,000 in seller concessions, which is different than seller closing costs, all right? And the difference here being that a seller concession would be a prepaid item like insurance. A seller concession can be a rate buy down or a temporary rate buy down. So you're buying your rate down from 6% to 5% for a year. That's a concession. Or if the seller's buying new appliances for you, or they're installing a fence for you if it's new construction, or a blinds package if it's new construction. So you can roll all that in as part of the offer, as long as the concessions don't exceed 4%. And again, your closing costs can be as much as they need to be to get the loan closed. Your lender will be able to delineate between what's a closing cost and what's a concession and keep the guidelines where they need to be so there's no delays or red flags when it gets into that final underwriting. So that leads me into key point number 6. I know I said that there's 5 key points, but here is key point number 6 for just y'all staying here to the end of the video, because you're probably wondering, like, why are you in that dingy looking mobile home with bad lighting? Well, here's why. Because first, you can do VA loans with mobile homes, and you can also do them to rehab homes. So you can get a VA loan and rehab your home. So it's going to have to make certain condition guidelines, of course, but being a rehab, you can get the purchase price for the home plus your renovation costs rolled into there. Now, in terms of how much money you'd have to bring down for something like that, that's up to the lender, and they can guide you on that, full disclosure. But I do know that it can be done. I've done them before for buyers and sellers. And yes, a VA loan can be done to fix homes, kind of like a renovation loan. But since you're VA eligible, the process is a lot smoother than having to do like an FHA 203K. So that's a little lagniappe for you. Thanks for tuning in. If you have any questions, or look, if you're active duty military or retired military, or you just have VA benefit, we love working with y'all because y'all make quick decisions. You know what you're looking for, and there's no muss, no fuss. And thank you for your service. We're happy to help you in return. Take care. Bye-bye.